This is Jonathan with the Strategic Multifamily Investing Podcast, and I have with me today JT Lynch. Just before we hit record, we were just talking about the flag that's waving in the background there with them of Texas Tech. So, talk to us about Texas Tech. How are you connected to that school?
So, I went to Texas Tech. That's where I met my wife. It's the home of the Red Raiders and Patrick Mahomes, Wes Welker, Michael Crabtree. And actually our basketball team is great now. We were at the national championship a couple years ago. But yeah, you were asking earlier, I was studying exercise and sports science there. Okay. The plan was to go into a physical therapy program after that. It's a 3-year, almost doctorate degree. But I graduated in 2008 with my undergrad. And the economy just was not good at the time. And I told myself, there's no guarantee I'll get a job, even if I go 3 years, and then I'll have even more debt.
Yeah.
And so, ended up testing the waters and moving back to North Texas, where I'm from originally, and end up in sales. And the rest is history. I never thought I would be any good at sales at all. But it turns out that that's kind of my niche. I started as a sales manager for a few companies doing door-to-door sales. Okay. And let me tell you, if you can do door-to-door sales, you can sell anything.
Yeah. So I think as a lessons learned for those who are listening, especially if you're younger or just out of school, most of us who've gotten degrees in our respective fields do nothing as it relates to degrees that we have. If anything, the degrees, hopefully college teaches you how to learn, not necessarily what to learn,
Sure. I think the biggest thing, it teaches you, there's a big movement out there for people that are saying, oh, college, it's not worth it. Why don't you just go to a trade school or whatever? Right. And you spend all this money and you don't even use it. The biggest thing that it taught me was self-discipline, right?
Okay.
When you go in, you think, oh, I'm an adult and I know what's going on. You don't know anything. You're a kid, but now you have to discipline yourself to go to class and to study. And then also simple things like learning how to study, learning how to take tests.
Exactly.
A lot of these insurance exams that we have to do, they're pretty hardcore. You have to learn a whole lot of information in a short period of time. And the test is pretty rigorous. If you don't have those test-taking skills, it's just going to be even harder for you.
I've learned, I used to teach at a for-profit college in the DC area for a little time. And I saw a lot of, students come in, it was kind of grade 13.
Yeah.
And it really shocked me and hit me really hard that either our education system is broken or there's a different class of student that's coming because they, at that time, it's been a couple of years since I taught. We had 3x5 floppy drive.
Yeah, okay. All right. So you're dating yourself now.
Yeah, I am dating myself. It's been a little while. And they were asking me to hold on to their floppy disk. And I'm like,
what?
You're an adult, right? Yeah. But
you're holding their hands, huh?
Yeah, and I said, no, they're yours. You can keep them. Well, I don't know have anywhere to put them. Well, responsibility is going to be something that you're going to learn.
Sure.
Definitely being a part of, going to college because, learning to study, that means you got to get up, you got to manage, you've got to do a bunch of those different things. And that's what you learn. And those things helped you do some door-to-door sales. I mean, did you enjoy door-to-door sales or was that one of the things you had to
There's a lot of it that was actually really enjoying. I really like talking with people. Okay. And so there's a lot of nasty people out there, sure. So you want to stay away from them. But there's a lot of people out there that just love talking with you and having conversations. I would get caught up sometimes, and we're not talking about anything I came here to sell you. We were just talking about life. And you'd be surprised how many people are out there, grandmothers that are living on their own, and they don't talk to anybody all day, and they're just begging for anything, And sometimes you got to okay, I got to get going, I've been sitting here for an hour. Thank you for the tea, but I got to go. but it was really neat just learning how to read situations. I mean, you can almost tell somebody's personality and how they're going to be just by walking up to their house. I also love being outside.
Okay. Pause. How so? How can you tell by walking up to their house? What is
think
it?
About it. You walk up to somebody's house and it's an older home. Maybe the paint's not so great and there's garden gnomes everywhere. You know that this person's probably a little bit older. They might live on their own. You know that they're going to have usually a little bit more patience with you. You know, if there's a minivan in the driveway, that they may be scared to come out and maybe only talk to you through the door, which is perfectly fine. Versus you go to someone else's house and they've got a jacked up F-250, a USMC sticker on it, you know, has a sign that says, "We don't call 911 here, we just shoot." You know, there's a difference in how you approach that. All cases doesn't mean that they're not going to talk to you or buy from you, but there's a different kind of way that you would want to approach each of them. And just using those cues, imagine the cues you can take from now meeting the person without seeing the outside of their house. Right. Then you kind of change your tone a little bit and are able to connect with them a little bit more. And sales is just that. It's connecting and showing them how whatever your product is can help their situation, whatever that might be. And so as soon as you can gather that information, the better off you are.
That's good. Now, does this transfer virtually? And we'll get around to our topic for those who are listening. I think this is really good information because it really tells you the quality and the reason why I brought JT on, and I'll talk about that in a second. But does that kind of garden gnome thing translate virtually? I mean, what do you do when you're approaching, say, a cold call or warm lead, you know, someone that you've been introduced to or whatever? How do you discern what type of person?
So if you're doing it over the phone, it's a little bit more difficult to figure some of those things out. Now, if you're on a Zoom meeting, now that's a little bit easier. Now you have a white background. However, I've talked to plenty of business owners and, you know, looking in their background, I see a football helmet or a flag flying. I'm luckily very interested in any sport that has a ball, you know, and a hoop or whatever. Yeah. So I know the news that's out there and can pretty much connect with everybody that I see a sports team is. And, you know, that's another thing about college is it gives you a sense of community.
Yeah.
Whether your football team's good or not, or whatever you like basketball, it doesn't matter. It's a sense of community. It gives you something to root for and a conversation to be had, and not just with people in that community, but what about the Big 12? What about the you know, it brings people together and it lets us talk about something more than just the weather, right? And so
exactly.
Breaking down some of those barriers, however, whatever they are, using any means necessary, sports is definitely a great way to do it.
That's good.
Well, when I was a sales manager, I told all my reps, I don't care if you don't like football or whatever, but these people have their flags flying out in their yard. They're proud of it. You better learn about the different teams, at least know a little bit about what's going on so that you can connect with them easier. So yeah, listen to Sports Center an hour a night just to know what's going on so you can talk to them about it. So
exactly. I guess that's a learning moment for me because I am not really basketball, football, whatever. I mean, I will watch them. I know how games are played or whatever. I never played them, but I do, know some of the very high highlight type items.
Well, and then nowadays, since the past 6 months, there's nothing really to talk about. So exactly. Even playing field now.
Yeah, for me, it's been most recently. I've started getting into soccer.
Oh yeah.
Watching the game and
European, like Bundesliga or MLS.
Yeah, just MLS. I was in the Washington D.C. area for a while, so of course, Washington's team. So and I went to maybe 2 or 3 different games, and I was shocked that I actually went. And I actually enjoyed the game. Got a nice little scarf and everything. So
yeah,
hey, I'm out there. Know some of the chants and stuff. It was pretty good. They were trying to get me to buy season tickets. I was like,
right. No, I haven't been to a game in a long time, but me and my wife are huge soccer fans. We watch, the Olympics and World Cup and everything every year, men's and women's. We have a local team here.
The women's soccer team is amazing.
They're amazing.
Very. Now, this is a fact that I just found out. Serena Williams and a bunch of other female athletes have put together a fund to buy and start a soccer in LA. See?
I saw that. Yeah, that's awesome. I mean, talk about trying to equalize the pay for men and women. It starts there, giving more opportunities. However, the other biggest thing is you got to market it well. If people don't know about it and don't go, then it's not going to work.
The team that they have, I am sure that it will be marketed well. I think Serena has even bought a share or two for her daughter.
Yeah.
So, I think it's going to be that, that speaks to the longevity they plan to have with that team and the marketing, which is going to be excellent.
I respect Serena a lot. She's done a lot of great things for her community. And most recently, she came out with some quotes. I thought it was great given the climate today.
Oh, I haven't
just trying to pull people together. It seems like everyone's just getting farther and farther away from each other. And she's, to sum it up, basically, she said, you can like this, I can like that. It's okay to disagree and we can still be friends. What happened to that, So I think we all need to get back to that point.
Yeah, I think that is something that I think we all need to learn a little bit better during this time. But at the same time, be sensitive enough to understand why, some of the, because I think that, it's well, I won't get into that. I'm gonna because I can go all day. I can talk. Yeah. When I was in college, teaching in that college, we had classes that lasted for 3-4 hours. So you had to go. And
those are those Tuesday, Thursday classes. You're like, what's crazy? You graduate college and then you start regular work life, 8 to 5 or whatever it is. And you're thinking, man, I used to dread an hour-long class. Like,
exactly. And I'm like,
yeah.
Yeah, but the key is to like what you're into, and I know a vast majority of us are not necessarily into careers that we like, and for me, real estate has been one of those things that as I find my niche as I'm working through that, like analyzing deals or those things are kind of fun. I put on some background and I'm digging in deep or whatever, and I can tell a story, do a quick video, send it out to people.
Yeah. It's
by the way, that's another tip. But go ahead.
But yeah, it's like a puzzle. I'm with you. I like tinkering with things, and it's every different property is a different challenge. And yeah, I'm with you. It's a puzzle that you get to figure out together, and I like it. And it real estate also brings people together like no other. You cannot do it alone. You have to network. And there's so many awesome resources for lawyers, CPAs, cost segregation. We were talking yesterday about a gentleman that I met he's just looking for some help just to get to that next step. And I thought of you, and he's pumped. He is now pumped to take it to that next level, which is awesome. And I love what I do, and I like being able to help you and other owners to try to get the best rates on insurance and coverage. But
that's exactly what I was about to get to. Let's talk about who you are, what you're into. We know you're from North Texas. You went to Texas Tech. You like sports, so that's good. So we're related now, in some sort of way. And the reason why I wanted to bring you on, JT, is because I've mentioned in a couple of previous podcasts that yes, talk to brokers and things of that sort, but there may be also key vendors in the team that you're building that may bring you deals. This is one. You want to get in contact with JT because he's brought to me some deals that we've looked at. Not all fitting exactly where we want to be, but again, it takes time. It takes the numbers to go through, and I want to say thank you for that. And so you are in commercial insurance. How did you land there? Why do you like it? What's the name of your company? Go for it.
All right. So we are Ramey King Insurance. We're based out of DFW. We do service the entire nation. So if you've got a property, in Washington State, we can help you out there. We are a brokerage. And so if you don't know what that is, basically what we do is we're not like a State Farm where we have one product that's all you can choose from. What we're going to do is go out to the market and shop multiple carriers to find you the best option. The best option is not always this carrier, depending on where you are geographically, the age of the apartment, the number of units, a lot of different things goes into it to decide which carrier would be best. We're usually going to go to all of them that we can anyways, but we kind of know which carriers like this and that. Mm-hmm. I got into this. So like I said, I was in door-to-door sales for a long time, doing very well at it. I have a knack for helping people learn different sales techniques, and I love helping and giving back. Go ahead.
I said, that's key. That's key. I'm sorry, because I always talk about making sure that you find people who have the heart of a teacher, that Dave Ramsey says.
Sure.
And that's JT. But go ahead.
Right. So I doing that for a while. I have a 6-year-old and I'm married for 9 years. The hours in that position are very unique, and they're unique because you have to be out when people are home. If you're working 8 to 5, well, everybody's getting home at 5 when you're off of work. It doesn't really help. So our hours were usually later in the day, worked a lot of weekends, and I was just away from my family too much, and one thing that's been great about this quarantine is really realizing how much I love my family and how much I really do appreciate being around them, and I have fun with them. And my son's at an age now where we have fun together. We play together. We play outside. We even play video games together. He's kicking my butt now at Madden. So.
Yeah.
So and he actually likes me still. So that's a huge plus. So I want to take advantage of that as much as possible. I decided to switch industries, even though financially it didn't sound like a great idea. I had a neighbor that was going into insurance, and I started out in personal lines. Which it's a tough market to reach out, and I felt like I was bugging everybody for their home and auto, but I was doing well at it. I was trying to purchase a franchise of my own, and I basically was 90% sure this was going to happen and pretty excited about it. Then I had a meeting, and the numbers just didn't add up, and I was super depressed about it. I just wanted to go home and go to bed and not even think about anything else. But that night I had a networking event at a local brewery here with a bunch of realtors. And I told myself, well, I told everyone I was going to go. It's going to be an hour. It's terrible. You're going to drink a beer and then you're going to go home and then be depressed, right?
That's
well,
right.
The funny thing is I go there, I sit down, and a gentleman sits next to me. And that's my future boss, my boss right now. He's in insurance. We just started talking and hit it off. And he basically said, we got a position I think you'd be great at. I'd like to talk to you further, give me a call. And I share that story all the time because it just shows you no matter what you've gone through,
right,
just get up and go. You never know what opportunities you're going to miss out on because you didn't go. And what's the worst that could come from it? You went and had a bad time. Well, go. You'll never know who you'll meet, what kind of opportunities are there. I'm a big believer in God shows you signs. He's not necessarily going to provide for you everything you need right at the the foot of the table for you, but He will show you signs, and you got to be open-minded enough to recognize those signs and when they're there, and take advantage of it too. And so for everybody that's out there struggling, look for these signs and look for these opportunities, and don't pass up on it because you never know what you're going to miss out on. And now I'm in an industry that I love. I love real estate. My family has several rent houses going all the way back into college. And so it's really fascinated me. And to be even in a bigger scope in multifamily, it's just amped that up even more.
So do you only do multifamily insurance, or do you have other insurance categories that your company does?
Yeah, it's a good question. We're a full service brokerage, so we can insure anything. We do have a personal lines. As well? We do have a personal lines department.
There you go.
So we've got, home, auto, all that. I specialize in multifamily, but also contractors as well, equipment dealers, you name it. We can do it all. And so that's the great thing about this industry and my company. When quarantine happened, we can work from home. It's challenging with a 6-year-old there who's also in school, but at least, I still have a job. Real estate slowed down a little bit just because people were unsure of what was going to happen. But I've got other industries that I work with. So to me,
so you're not necessarily locked in right now.
Yeah, exactly.
I want to ask you the crystal ball question, and I want to get down to some real nitty gritty insurance type questions.
Okay.
But let's look into the crystal ball right now. When we're recording this, we're still in the middle of COVID, right? We're about 4.5, 5 months into COVID right about now.
Yeah.
Right.
Yeah.
And so when this airs, it'll probably be a year from the time that we have this, because we've been recording once a month, and hopefully we might wind up having to shift these a little bit sooner. But right now, it may be a year before this airs. But what do you see happening in the next coming months, or as far as you can see in your crystal ball, in relation to, say, multifamily, and then in relation to, say, multifamily and insurance?
Yeah. So with multifamily, we've already seen a huge uptick in investors going out to look for certain properties already again. Earlier this year and late last year, it was just crazy. We were attending probably 3 or 4 networking events a week. We're really involved with Lifestyles Unlimited. I don't know if y'all are familiar with that, or Brad Sumrock's event. And basically what it does is it brings investors together, and it's a teaching area for new investors. They're introduced to lead syndicators as well as vendors as like myself. And so that was going huge, and then everything just kind of stalled because no one knew what was going to happen. Right now we're seeing that uptick again. And I think what's happening is people are realizing that the economy's still pretty steady. And last I looked, I think the NASDAQ was up the highest it's ever been, maybe yesterday. And so they're realizing that there's still opportunities out there. And a lot of these old property owners, they're going, I'm just going to get out now. I've been in it long enough, made enough money.
Call me, please call me.
Exactly. And so there's a lot of opportunities out there. And I think people are just trying to take advantage of it. One of my investor mentors, he told me that the most success he's had is when everyone was scared to do something, right? And so the people that are kind of coming in and riding coattails of the heroes, if you will, that initially started in these investments, they're making some money, but not as near as much as the people that took the risk at first. And I think a lot of the lead syndicators and the people that are real serious about it, they're noticing that this is an opportunity where everybody's scared, and this is when I need to jump on it because there are some good deals out there. As far as what's going to happen in the future, it depends. I think it depends a lot on what happens with the HEROES Act.
That's the add-on? That's the add-on now?
Yeah, it's the new stimulus package that's it just got released from the House, and now it's on the desk of the Senate. There's pieces in there, and I was on a webinar last night with an attorney, and he kind of broke down. It was awesome. It's a 1,900-page report, and he summarized it in 9 slides, basically. Wow. And I can share that with you as soon as he sends it over to me. But there's a lot of pieces in there, unfortunately, that don't necessarily help immediately. The people that have lost their jobs. There's stuff in there that it's like, why did you throw that in there? One of them is let me think of one that was just kind of ridiculous. It's an agenda, right? It's a political agenda, it seems like, and they're trying to sneak some stuff by that really doesn't have any weight to do with.
Well, this is an election year, so I can imagine both sides wanting to ensure that their bases are covered moving forward. So.
Right, and one of the things that's a little scary for property owners is there's what's in there is a 12-month moratorium, which basically states that you can't evict anybody for 12 months no matter what. Unfortunately, there's a lot of bad people out there that are going to take that to mean, oh, I don't have to pay rent for 12 months and there's nothing you can do about it, right? I don't see that passing.
Yeah, I had another associate. We were actually going to do a podcast earlier this week. We had to reschedule, but he has a fund or a group of investors, pretty much more or less on the residential side. Mm-hmm. However, he is doing some small commercial with them, and he's saying that a lot of people. He had a property that was on one of the major beaches, and he says he's no longer renting that property. Mm. I think he was saying that. Yeah, he or somebody that he knew. I think it was somebody he knew was no longer going to rent that property because they were concerned that people were going to kind of scrounge up whatever it was to get into the property and then not pay for an entire year. Yeah. And so there are a group of investors who are concerned about that and are no longer going to be renting very soon because as a result of that.
Sure.
So, okay, I didn't know that was in this bill.
Yeah, well, and like I said, some of the other stuff in the bill was being able to vote without any registration or even use your social, even being able to vote, but have someone bring your vote from your house to the polling booth, which would be great. You know, you're handicapped, you can't make it out there, you're scared because of coronavirus, so you're finding a way to go vote. So I see the good intentions of it. However, there's just so much room for voter fraud with that, and it's, you know, I think that the stimulus package, if you really want to stimulate the economy, should have mainly just incentives for people maybe that lost their jobs or for renters, and not this other stuff that really doesn't have anything to do with that. But you're right, it is an election year. So.
Yeah, and the same thing we could probably say for TPP. I think that's what it was. Is that what it was? The package back in 2016, 2015.
Oh, okay.
You know, before that election. Actually, it was 2000. The when we were rescuing the banks and things like that. My apologies, my brain is drawing blank now. But there was all of us. You know, but most of the packages that I've learned, you know, and if you look at the bills, there are a lot of riders that are attached to them. That again, for whatever positive or negative things, you know, that's kind of, if you will, how the sausage is made out there. So with respect to insurance, I mean, is there, you know, COVID-19 insurance for multifamily? Is there, is the insurance industry being impacted, you know, because there are claims because of whatever reasons related to the coronavirus? And or the economic loss that we've been seeing?
Right. It's a great question. And it's something when all this first started that everyone was wondering, you know, do I have coverage? The answer is no. Right now, it is not covered. You would think, oh, maybe loss of rents would be covered because they can't pay because they lost their job due to this pandemic. Unfortunately, that's not. It would be one thing if there was a breakout of, I don't know, smallpox in this entire apartment and it just affected that apartment. And then there was one instance where some outside source brought that in and affected all your tenants. You know, that would be one thing that would be covered. But as far as globally, it's not considered one event for that specific complex, and it's only affecting a certain percentage of your tenants and not all of them. So it's not covered as of yet. It will be interesting to see, though, if there is some sort of government or state mandated things to be put into insurance to have that.
I was going to say, is there a COVID-19 insurance rider or something being talked about, or, Is that going to something else
Right now, I haven't seen any
Okay.
for real estate. It'll be interesting if there will be that option. However, it will cost you. It'll cost you extra premium, and then you've got to weigh those options. It's kind of like the TRIA coverage or terrorist coverage. After 9/11, now they offered this terrorist coverage, which there's a lot of different circumstances that have to happen before that even gets kicked in. Right. So a lot of property owners, we offer it. A lot of property owners, it's actually 50-50. A lot choose to do it, a lot choose not to. It's fairly inexpensive, which helps. We're talking, I don't know, a couple $100 a year for it.
It's not bad.
Maybe even less. So, a lot of people do it just because it's cheap. But it's similar to that. I imagine if they were to add something, then you would have a choice if you wanted to add this. But, nothing like this has happened before. Right. So to have something there in place, it's just doesn't exist right now. So
we're having, it seems, and I could be very wrong about this, and you could tell me whether or not this is actually true statistically, a lot more events, natural disaster events where there's, really bad thunderstorms or hurricanes or floods or tornadoes that are impacting, multifamily. Are you seeing an uptick in that? And how is that affecting, so the rates or additional riders that one can take on?
Right. I get asked often, why are insurance rates going up so much in commercial real estate? And it's true. They're up, especially in coastal areas or the, Tornado Alley where there's a lot of hail. In DFW, most of the reasons behind the rate increase is due to hail. And it's simple. It's claims. I know a lot of people have bad feelings towards insurance and, they're stealing my money. Well, the fact is they do pay out claims all the time. And, in DFW, you can expect baseball size hail in different thunderstorms. Man, I'm going to say 5 times a year, and they come through one area. And the other issue is there's only so few carriers that will write for multifamily properties. Okay. And so since there's, we'll use a dozen, there's more than that, but let's say if there's only a dozen, well, now they're all sharing that risk from these storms that come through. One carrier might be writing 1,000 different properties here in DFW and they all get hit by the same storm. That's a lot of claims to pay out. They've got a pool of money to make these claims to make sure to be able to pay out. When that pool is depleted, the only way to get that pool back to where it needs to be is by raising rates. And certainly in coastal areas, it's even harder. After Harvey, there were areas where low-lying areas that weren't in a floodplain, but did get flood damage. And so now we're seeing a lot of lenders even and carriers suggest that even though you're not in a flood area, to get flood insurance. Yeah,
I agree. So there's a difference between water damage and flood insurance, because flood is the water comes from the bottom up versus rain or whatever damages from top down.
It would have to be from outside the apartment to come in and cause your flood. There's other coverages for like a broken pipe and things like that are pretty standard. Right. But yeah, and actually a flood, I believe it has to affect an acre worth of land for multifamily. So even though you have a flood and it comes in and damages a building, if it's not actually large enough, then it may not be considered flood.
So then do you require or suggest that operators require their apartment owners or renters to have renter's insurance?
Yes.
Go ahead.
Yeah, renter's insurance is huge. We're seeing more and more landlords require it. Before, that was kind of a taboo to try to force someone to have renter's coverage. But no, you want all your tenants to have renter's coverage. We do have a program that is designed to cover all the tenants that you have, and then you're in control of that policy. So I think it costs $6 a unit, but you can charge $12. Increase the rents by $12 to your tenants to pay for it. And what that does is you're in control of it. If you say you can only rent this property if you have renter's insurance, well, then they could come in, show you proof of insurance, and then cancel it the next day, and you would have no idea. And the main point of having it and having your renters have it is, first of all, if something gets stolen, they want to be able to recoup their property, right? But second of all, a lot of the accidents and things that occur at an apartment complex would be maybe a small kitchen fire, right? That only affects one unit.
Right.
You don't want to pay your $10,000 deductible for the whole complex, or sometimes even higher, to fix some of these shelves that were damaged by this fire.
So then at that point, who is responsible for paying? Is that your tenant responsible?
Yeah, the tenant would pay their $100 deductible on their renter's insurance, and then they would get it fixed at that time. And that's the huge advantage of having that. Another workaround to make sure that everyone is insured and has renter's insurance is you as a property owner tell them, I want to be added as a named insured to your policy. And what that does is if they make any changes or cancel it, you are notified along with the insured because you're named insured. And usually that's the easiest way to kind of get around it and make sure that everyone's protected.
So basically you're sending out a notification to all of the tenants and saying, hey, we're now, we've got a new insurance policy. We're now requiring you to have renter's insurance, and please show us proof of renter's insurance. Please make sure that we're named as a not beneficiary, but what is it?
You're added as a named insured.
A named insurer. Mm-hmm. And then that way, if it gets canceled, you get notified, and then you can go back and say, remember, there's a requirement now that you have renter's insurance. Please, 30 days, let us know you're going to get this done or whatever.
Right. And I've seen some property owners do it like that, kind of a blanket statement to everybody. And I've seen some that, no, they added as a requirement for new tenants. And I guess there's advantages and disadvantages to both.
There you go.
But it's, before, like I said, it was really taboo, and you'd be afraid to lose renters or not be able to acquire new ones because of it. But now it's very common now. And so as a landlord, I wouldn't be afraid to implement that at all. And I would have that as a standard operating procedure for sure. It's going to save you a ton of money. Yeah. It's really inexpensive, depending on the tenant's credit and their property that they have, which usually isn't a lot. They don't have a whole 3,000 square foot house full of stuff.
Right.
So it's really, really inexpensive for them.
Generally, it's about $100 or so, $200 a year for a renter. I think it is.
Right. And think of it less as a burden that you're putting on them. Some of these families we see, and man, they're struggling. Don't think of it as a burden. Think of it as a teaching tool for them, and teaching them how important that is to have their materials covered, because it is, a lot of people just don't know about renter's insurance, believe it or not.
So here is something that we see, from time to time, especially on the news, and there was an apartment fire, and, there were, 5 or so families that were displaced. Well, if they had renter's insurance, right, and the $100 deductible is paid, and, if you're a passionate landlord, you could say, we'll pay that, it's $500, $100 for each family or whatever. And now that family can, have the money to be able to have a new start.
Yeah. The carriers are going to, the whole idea behind insurance is to make that family whole. So whatever they lost, they're trying to replace it. So say they lost a 60-inch TV. They're trying to find that exact model and give it to them to make them whole. If they can't find it, then they'll find a model year newer and get that to them. But yeah, you're exactly right. Going a little bit above and beyond for your tenants bodes well. And if we're talking about you're worried about tenants not paying rent, it's really going to affect these landlords or slumlords that really aren't helping their community at all. But the people that have a great relationship with their tenants, they're going to, more than likely want to be able to pay rent because they have a relationship with you. If they can pay, they're going to want to do the right thing usually. Yeah. One thing that I do want to mention that I learned last night from a seasoned operator, they were talking about tenants that just won't leave, right? And there's a lot of legal litigation that you can go through to try to get them out of there. Now, during this COVID crisis, there's not many there's not many judges that are going to back you by evicting someone right now.
There's a lot of court systems that are not even hearing,
right,
evictions at this present time. But go ahead. Sorry. Yeah.
However, a good way to get someone out, pay them $500 to leave.
Cash for keys.
Cash for keys. And you're thinking, gosh, I need 10 people out at $500. That's a lot of money. Well, if they're staying in your apartment complex for 3 months and not leaving, that's a lot of lost rent. And so you can recoup that pretty quick. Cash for keys is, it's just thinking outside the box. It's cutting your losses. Sometimes you got to swallow your pride, even though,
it's a sunk cost. It's a sunk
cost. And in the back of your mind, you're thinking, oh, this isn't right. Who cares? In the end of the day, you want them out of there. That's a really easy way to get them out of there, and they can be someone else's problem. $500 goes a long way for people that are, trying to play the system. Usually that's a good way to get people out if you need them.
There's a lot there. I've got some more questions related to even applying for insurance. I talked with you, and I was talking to another broker. This is when I first kind of started. And, there was a concern because you mentioned you're a broker. So you go to multiple different sources. You don't have just one source.
Yep.
And so was this other person. And it was, be careful if you shop around, trying to get insurance because, it'll raise a red flag or something. And, kind of like, I guess, almost like mortgage kind of things. You have a mortgage broker and then you've got a couple mortgage brokers. You do too many pulls on your credit, it can affect credit score. Is that true? And can you tell us about what that meant, just so
there's a couple different kind of pieces to that. Mm-hmm. First of all, if you're shopping for insurance, and a lot of people don't realize this, you go to me, right? Mm-hmm. I'm going to go out to as many carriers as possible right off the bat and let them know, hey, we are looking to write Park Avenue. And what that does is that locks up that carrier, right? So if you then go to another broker and he's going to shop for you as well, you think you're doing your good due diligence and finding the best options as possible. You go to another broker, and if they're any good, they're going to go to these same markets. They might have one or two other carriers that they have a good relationship that I didn't go to. But for the most part, like I said, there's only so few carriers that are willing to write multifamily.
Got it.
If they try to go and shop, I've already got it all blocked. So there's not much they can do. So usually the best bet is to find a broker that knows what they're doing in this multifamily space, trust that they're going to go to all the right carriers, and let them shop for you. You're doing your due diligence by finding that great broker, and that's your due diligence, and then let them do their job and go shop for you to find the best options. Now, once you've kind of been established already in this apartment for several years and you shop it every year, well, yes, carriers do talk. And what they'll say is to each other, hey, this guy, he shops every year. Just letting you know, right? And basically that's telling the carriers that you're not, they would rather have someone that is, stable and likes to stay in one place.
Good.
Not to mean, we shop all the time.
No, this is good because, if you have just say, 50 unit, 100 unit complex and you're shopping just for that one complex over and over, I can see that. But let's say you're growing, right? And you have, another 100 or so this year. So now you're thinking about doing a blanket policy, you're getting some legal or some accounting advice to say, I want to be able to cover all of these. Because a lot of times when we get pro formas, right, we'll get these pro formas where the insurance is $9,000, but literally it's $26,000 when you're going to go shop.
All the time. Yeah.
It's an umbrella policy, and that's the reason why there's am I correct in saying this? Let me make sure I'm correct in saying this. It generally is an umbrella policy because they're covering all of their units or all of their properties, not just that one property. And the reason why it's so high is you're covering just that one property. So and is that a problem if I'm every year as I'm growing, I've increased 100 units. I now need to figure out what's the best for all of my units, not just for this one property.
Right. So The umbrella, the theory you have is correct. Umbrella, I would not use because umbrella coverage would be excess coverage. So if you're talking to an insurance person talking about umbrella, they would think of something else. Umbrella coverage is going to increase your liability limits. But as far as covering more than one property, you're right. And what we do is we try to put all of our properties on a carrier with a program, and that program is going to include hundreds of different apartment complexes within that, and they kind of all share this pool of liability, and these apartments are spread out all across the United States in all different sizes. That'll lower your premiums because you're kind of sharing that risk. And so that's the word you're looking for, is that program coverage. That's including not just your properties, but a whole bunch of other people's properties as well. And so, if you increase your unit size and you buy another one, that doesn't mean that we need to find a new option. We can just as easy add it on to what you have, or we'll shop as well to see if there's a better option for, that situation, that geographic area, or the age of the apartment and things like that. A lot of times you get a renewal back, and maybe it did increase. Lately, a lot of them have increased. That doesn't necessarily mean that you need to change, right? Depending on the increase, we'll look at the percentage, and man, it went up 10%. That's actually pretty good, right? We can go shop, but you're not going to find any. We just know. We know you're not going to find much better than that. However, there are cases. I talked to a gentleman yesterday, and his insurance increased 51%. And so now he's shopping for sure. And then so in those cases, yeah, we're going to shop for you every year to find you the best option. But to your point, if every single year and in the middle of the year, you're just trying to find something different, first of all, as a broker, I kind of don't want your business, because you're not really following the correct system and what you want to do. You have no allegiance to me, because you could leave for somebody else anytime.
This is based on price.
And usually those people are trying to do kind of shady things, not talk about the dangerous railing that they have on their staircase, and they're not trying to do this. They're making a shady claim here or there, and then they're trying to shop around to hide from those kind of lies. And that's one thing that carriers will talk about.
Got it. So I get that, but I guess I'm still trying to understand then, the difference between someone who has, again, on a pro forma, you get, our insurance is at, 9,000, and then I get a quote and it's at 26,000.
Yeah.
Were there additional riders that were added on to justify that $17,000 jump? Were they in a different program? I mean, I'm trying to understand so I can,
It's a great question. And so we see a lot of pro formas, and you've sent me plenty as well. And by the way, for your listeners, what I do that's a little unique is, you've got a property that you're looking to submit an LOI on. You're trying to get your numbers together. You've got a pro forma in here, like John said, that has an insurance number there. You plug that in. That's not necessarily what the insurance rates are nowadays, and there's a few reasons for it. So you send me that information from that property. Usually what I'll need is rent roll, T12, and the offering memorandum if you have it. Just send me as much info as you can on the property. And what I'll do is I'll do a working indication of what the insurance should cost you in that geographic area for that age of the apartment.
How long does that normally
rates
take?
At this time.
How long does that normally take?
If you send it to me, depending on what's going on, I can usually get it to you within about an hour. And it doesn't take too much time for me. And I appreciate doing it. I do it for free. You're probably going to send me 10 before you actually get one under contract, and I'm fine with that. We've been doing this for so long that a lot of these complexes you're looking at, we've either insured before, our current client is in it and trying to sell it, or I've already done indications for it and it's already ready to go anyways, because other investors are looking at it as well. So I like doing it because it keeps me on top of the game of what's going on in those areas. Right. Sometimes I can give you more insight than you know. A few months ago, somebody asked for an indication on a property here in DFW. I sent them what their annual premium should look like, and I told them, oh, I've also adjusted it. It's a little bit higher because of the fire that happened a month ago. And they emailed me back saying, oh, there was a fire. I said, there sure was. And so sometimes we can give you a little more clues than you might have off that pro forma. Back to the pro forma, we have seen insurance rates that are nowhere near close to what they actually are. And there's a couple reasons. One would be they're going off of insurance costs, first of all, from a year ago, and they've changed. We've seen some rates in there that are flat out made up. I don't even know where they got it. They're probably using, I guess the selling broker's thinking, oh, it's around $250 a door. We'll just do it like that. We've seen some that just include property coverage. Well, what about the general liability, the umbrella? What if you need flood? Those aren't in there, so that increases it by $20,000 or whatever it is. And then some of them could be on a huge big program that it's very hard to get into. You have to be part of a huge property management group to even get access to it. Some we don't have access to. You just have to be part of that management program to have it. So there's a lot of reasons for it, and that's why it's so important, John, to know what you're getting into. And it's easy. Just email me the information, and I'll give you a ballpark figure of what the insurance cost should be in this market. And usually I'm within about $5,000. I try to be as conservative as possible on it as well. That way, when we do get you a live quote after it's under contract and it's $5,000 less, well, that's awesome. Now you can buy that playground or whatever you're planning to do. Exactly. But at least you budgeted for it, right? And your lender's going to want to know a number as well. And if you send that lender $9,000 when it's $25,000, well, that throws off everything, right? And so you want to make sure that it's right.
And also when you're talking to your partners, it makes sense too, because you can say, we've, sent this off to JT. Here is the insurance quote. We've talked to the county as it relates to the purchase of this property. Here's what the new taxes are going to be, because generally those two things happen to be the biggest things that I think that throw people off in terms of numbers, because they're estimated. The other one is probably property management, but that's based on how you plan on managing the property, whether or not you're going to have on-site staff or if you're going to just be managing it remotely.
Yeah. So here's my disclaimer on my indication.
Okay, go for it.
They are working indications. I don't have loss runs, right? That's usually not provided to the buyer until after it's under contract. I don't know necessarily. Yeah, I don't know necessarily if there was an assault there yesterday. I don't know. I can, just like anybody else, look at Google and see, crime rates and stuff within the area. But without those loss runs, I don't know if there was a fire last year, and that could greatly affect the premium. So there's times when I've told people, hey, the insurance is going to be $20,000 to $25,000. Now we go and dig into it. It's an older property built in the 60s. It's got aluminum wiring. Someone was murdered there last year. That's greatly going to throw off my indication. So by no means am I going to be exact on everything, but at least it gives you a good ballpark in normal circumstances, right?
So we've been talking for quite a while here, and I've enjoyed.
Seems like we just got on.
I know, I'm perfectly fine with going this far, but I want to give kind of like as a last question, and then of course open it up to you to be able to say how we can get in contact with you and anything else you want to share. But my question is, with respect to insurance, I'm going to go to a broker. They may want to work with you, they may want to work with someone else. What am I looking for in terms of an insurance quote? When someone quotes me back, oh, it's going to be $26,000. How do I know that I have all the proper riders? We've talked about two of them here, that you need to have flood insurance, and you should do something as it relates to renter's insurance, whether or not you have it as a part of your policy or whether or not you get your renters to do.
Yeah.
You've also talked about, in passing, I think you said general liability coverage.
Mm-hmm.
You talked about umbrella coverage. And what are some of the other things that I should have as a good policy for multifamily?
Yeah. So for 90% of the properties that we write, most of the time you're not going to need flood insurance. And you'll know, we look up on a FEMA flood map of the elevations and things like that. You might not be by the coast or a lake, but you could be by a spillway or small creek or something like that. So maybe we look into it. But 90% of the time, what you're going to need is property coverage. And that is the bulk of your premium, by the way. It is covering the actual property. And what that means is for your hail damage, did a car run into a side of the building, things like that to cover the property. Right. The second part is general liability. And that's going to slip and falls. Think something that you're liable for on your property that hurts somebody. That's going to cover you for lawsuits. Fannie Mae usually requires a $2 million limit for your general liability. Right. Then what comes in is an umbrella policy or an excess policy. Usually we'll write up to $5 million for that. And so if you're in a lawsuit and they sue you for more than $1 million or $2 million, that's when that umbrella kicks in to cover you for more liability. The umbrella is actually the least expensive part of it. And it's great to know that that's there, and it'll be a Fannie Mae requirement as well. So property, general liability, and
2 or 3 times the value of the property or something like that, umbrella? Or
yeah, it's usually based off of unit size.
Okay.
And so it depends on how many units are. Property coverage, however, and I'm glad you brought this up. Property coverage is based off of square footage. And so I know a lot of people have this number in their head, which is good for what you're trying to just ballpark figures. It's $300 a door, and it's going to be different in every geographic area and every situation. But also remember, if I gave you a quote for a property here on one side of the street and on the other, you're thinking, well, he told me it's $300 a door, but across the street, you tell me it's $350 a door. Right. Well, remember, it's not based off of a door. It's based off of square footage. The one across the street that's higher per door could have a much bigger square footage. It could have larger apartment sizes, or it could have like a large gym and workout facility and things like that. That increases the square footage, and now it's more per door, but actually the same rate per square foot. So,
got it. Well, how do people get in contact with you to learn more about you, to connect with you, to network with you, to get you to maybe quote not only multifamily but some other stuff?
Yeah.
How do people get in contact with you?
The easiest way is by email at jtlynch, Lynch, at rameyking.com. That's RAMEYKING.com. That's the easiest way. And like I said before, I love what I do. I love providing insurance, and I'm an investor as well. So when you finally get something under contract, I am genuinely excited and happy for you. I know how much hard work that goes into it. I know how much it's a life changer for you and your family and your team, and not to mention your kids, your grandkids. This is creating generational wealth, and it's a huge step for your whole family. So, I love to be involved with all that, and even more, I love to give back as far as providing networking opportunities, or even other vendors that may be able to help out, attorneys, water conservation, cost segregation, things like that. I'd be happy to share my network with you. So yeah, get in touch with me anytime. Like I said, some people are kind of hesitant to send me properties they're looking at, but I will do 10 indications before you close on one. So I'm not worried about it. Just send me what you got, and I'd be happy to help.
They're hesitant because they think that you may steal it and give it to someone else?
No, I think they're hesitant because they don't want to bug me. They think, God, I've sent this guy 26 properties. He's probably thinking, just pull the trigger. What are you doing? You're wasting my time. That's really not it. I've got a whole file of properties I've done indications on. If it's something I haven't seen before, you're just adding to the file. Eventually I'll have all the apartments in the United States, and we'll keep it up to date. So really, you're doing me a favor by keeping me on my game. And I love to help you out, and I'm going to check back with you in a week or two to see how it's going. Lend some advice if I can. And before I leave, I will tell you this: carriers are going to be very picky nowadays.
Wow.
We've seen some carriers that they will not write properties in DFW that are built before 1990. They've just decided to make a cutoff. And a big thing right now is properties that were built between 1960 and 1980. There's a copper shortage, and they started using aluminum wiring. Aluminum wiring, when it hits an outlet or a light switch, that's where it gets real hot, and it's actually caused a lot of fires. There's ways to fix it, multiple ways. One of the easiest is aluminum and copper pigtailing, which I'd be happy to discuss more with anybody that's interested. The other thing is these Federal Pacific, they're called stab lock panels, like breaker boxes.
Yeah.
Those are very dangerous as well. And so carriers, they won't, some of them won't write it. Some of them will write it, but they have to make sure that you have a plan in place to be able to fix that as soon as you acquire the property. Yeah. So those are things to look out for. The other things are simple that, it seems like a no-brainer, but sometimes I'll ask property owners, well, how old is your roof? And they don't know. It's like, you know every single dime that's coming out of that, from rent to laundry to all that, but you don't know how old the roof is, right? So little things like that, just keep take your eyes off of the spreadsheet for a little bit. Take a look at the actual property. How old is the roof? Are you going to need to replace the pipes anytime soon? That's a huge cost. Different things like that. Do a little bit more due diligence, because carriers are going to want to know.
Bring you back, because I have a whole conversation around due diligence and making sure that the indication that we have, that we wind up, that we're operating from is actually going to, turn into something that's more viable. Can we get some of that information now, as we're doing, the LOI conversation before we get under contract, so we understand what those real numbers are, and makes it, I think, it easier for everyone else potentially. So I think we're going to definitely bring you back for.
Yeah, I'd be happy to. Yeah.
So listen, thank you so much, JT, for, again, everything that you've meant to the team that we're building here, and for the connections that you're making for us. And hopefully we can make some additional connections for you and your team, and
that'd be great.
business as well. So thanks again, man.
Yeah. Thanks for having me.
Bye.